Hey, welcome to Embrace Tax, and this is a tip about our mid-year checkup. If you have an accountant or if you don't have an accountant, we are going to tell you, or I'm going to share with you a few things that you need to check halfway through the year. Most people will go to their accountants only at the end of the year, and by that time, it's already too late to address any issues that we could have during the year. So there are a few things that you need to be on the lookout for. And initially, these things are things, in our lives that will affect our tax situation. For example, if you get married and now you have two incomes combined, well, that is going to affect your tax at the end of the year. Now you're going to have to file either married filing jointly or separately. Each status provides some benefits, and so it's very important that you address these issues before the end of the year. One income versus two incomes will make a difference at the end of the year. Now, if you have changed jobs, that's another thing. Let's say you were very successful this year and you found this great job, but that job actually pays a lot more, which is always good, right? But we need to make sure that we also adjust the withholding for that new job to make sure that we don't owe taxes at the end of the year. Now, if you have children that are in college or going to college, there are some tax credit benefits, and that's something that you need to talk to your accountant, with your tax accountant, and see how that's going to play into the overall tax liability or not at the end of the year. So it's very important that you address that before. A lot of people think that they might get the credit, but in reality, depending on your threshold and the type of education you're getting, I mean, there are other things that we consider when we actually have those credits. The number of years in college, if it's not the first year. So definitely, talk to your accountant to see if you can take this credit if your kids are in college. If you have a business, very, very important. A lot of small businesses, they make money throughout the year, and sometimes their bookkeeping gets done at the end of the year, and you realize that you made really good money and that you had made to make estimated payments. Estimated payments are done quarterly, and it's the same concept as the people that work for wages. We kind of take a little bit as we go. So the same thing for self-employed people. We have to pay taxes quarterly to the IRS and the state agency where you are. So very important to check. If we check at the end of the year, unfortunately, if you underpay, then there's probably interest and penalty depending on the income that you produce during the year. Also, this is something that happens very often. It has happened to me one time when I didn't realize that for the child tax credit, if you have children, you get the child credit actually if your child is under 17. So the moment that your child turns 17, you you can't really take that credit, and the child has to be under 17 at the end of the year. That means they have to be 16. So that's one credit that a lot of families don't realize, or they don't even plan for that. And then at the end of the year, you realize, oh my God, I lost a child for tax purposes, and we don't no longer get that credit. So it can be a shocker, and it can make a huge difference if you're expecting to get that child tax credit. Also, if you have any assets, it's very important that if you sell, let's say you have a property, you sold it, if you have rentals, anything that can generate capital gains, it's very important that you check with your accountant to factor that sale before the end of the year, and make sure that you adjust or you estimate any payments that you might be responsible for. So that will give your tax accountant some planning or some time to do some tax planning for you. So here are some of the tips, and I hope that you can take this in consideration, so at the end of the year there's no surprises. Thank you, and follow us on Facebook for more tips.